Happy Friday, everybody. It's great to be back in the United States. We had a wonderful trip to Tanzania, but now the focus returns to making sure that we're protecting your net worth and preparing for the times ahead. Now, one of the interesting things that's been going on is that the stock market, for the most part, seems to have been shrugging off this on again, off again tariff. The threats of tariffs continue to be there, then they continue to get pushed, or maybe there's a deal that's put in place, but it's not quite what we want. So there's still a lot of uncertainty out there. One of the things that's going to be very interesting to see now that we've had some deals come in is whether these continue to be pushed, whether the administration continues to push to see if they can get more and more of these tariff deals, which really in all reality is just a rehashing of deals that were already in place. And so that's been one of the things that's a little bit frustrating, is that instead of just working with the deal that they had and trying to fix it, they rip up a deal and then they come back and they try to renegotiate and basically get to almost the same place they were, and in many cases, not to as great a place. And so what we're starting to see, and we saw it in the June data with inflation, is inflation is starting to tick up. And what happened, and one of the reasons that we think that the stock market has been able to shrug off these tariffs thus far, is that so many producers and so many buyers, not just consumers, but also the people who are buying and selling intermediate goods, were able to pull in demand from later in the year. That meant they were able to stock up on inventory before the worst of the tariffs went or will go into effect. And that means that at this point, they have been able to sell to customers from goods that are priced as they were at the beginning of the year, not as they will be or as they are now. And once that level of inventory runs out, then it becomes really challenging for these folks to justify continuing to charge the same price. And in fact, probably a lot of those prices will get passed through to consumers so that these different producers can keep their profit margins. Now, what does that mean for you? What are we doing right now? Well, we're not doing anything exciting. We are looking for solid companies that sell durable products that people are going to need. We are not reaching. We are not going for the NVIDIAs or the Teslas. Those had their runs. We are now looking at solid companies that produce real goods that people are going to want, that can weather some of this volatility a little bit better. And it's particularly good if we're buying companies that are larger, that have multiple different supply chains, and are able to source goods from different places. This, combined with the fact that we are very sensitive to the fact that there is volatility. But volatility in and of itself is not a bad thing. And we are not going to make moves to your asset allocation unless A, you have had a fundamental change in your goals or your net worth, such as an inheritance, or there is really a drastic move. Because if we're just following the up and down as tariffs on, tariffs off, what we end up doing is wasting a lot of money buying and selling. And so that's the reason that we're going to keep these bands fairly wide around your target allocation. And what I mean by that is, if you own 40% domestic US stocks, we are not going to really do a whole lot if that stays between 37 and 43%. That allows the market to fluctuate without your risk tolerance being completely out of whack for what you need to reach your goals. So what you need to take away is, we have had some luck with the stock market because demand has been pulled forward. That has led to the market continuing to climb, although it has been volatile. But we're starting to see some of the impacts of tariffs in prices, which will eventually be passed through to consumers and slow down economic activity. And because of that, we are very aware of the companies we're buying. We are buying very solid, very stable companies, not companies that do well in a high growth environment. If you have any questions, if you'd like to talk to us, please reach out. We are always here and happy to strategize with you. Have a great weekend.